After the strongest month in a couple of years, is there enough momentum to keep stocks climbing? Our next guest says there is. Ryan Detrick, Chief Market Strategist with the Carson Group, joins us now. I know you're trying to be clever. The Rocky Balboa market, what's that? You can knock them down, you can't keep them down, can't keep the market down. What's up with that?
Yeah, that's right, Scott. Good afternoon, and thanks for having me back. So, I was taking a look this year so far. When we have a down day on the S&P 500, what happens the next day? So you get knocked down, what happens? Scott, I know the number doesn't sound all that impressive. 0.22%. Okay, that's the average return the next day after a down day. That is one of the strongest we've ever seen. You're talking 2003, 2009, and 2020 were other years when you have a down day, what happens the next day? That's just, I think, a neat little stat that really shows, what we kind of know. This market does not want to go down. I've been coming on for a while saying, listen, this lows were in. We were saying that back in April. It sounded crazy then. Now it's looking more like it. But I think it's really important to know this market doesn't want to go down, kind of like Rocky.
That's the Yo Adrian effect.
There you go.
I guess what you're showing us. Are we going to new highs and sooner than people might have thought?
Yeah, we think so. I mean, honest to goodness, is not that far away as we sit here and talk right now. But the reality, again, is look around the globe. I know you've had a lot of guests talk about these things. Just about most countries are hitting 52-week highs or all-time highs, like as we're talking right now. U.S. is probably going to play catch-up. One other thing that's really important, those advanced decline lines, right? How many stocks are going up versus down? This is a broad-based participation. We have those new highs and advanced decline lines recently. That to us, again, suggests, June, they called it the June swoon. When you have a strong May like we just did, obviously, June tends to do pretty well. In fact, the summer months, which are normally pretty strong, actually, these next 3 months are usually pretty good. They get even better when you have a big May. So we think new highs are coming probably this summer here.
I'm looking at all of the notes that you gave to the producer of this segment, and I don't see a single risk in here. Like, are you not thinking of any possible issues with your thesis?
Yeah, I heard Tom Lee's after me, so the fact you have Tom and I back to back, that could be a risk by itself. It's getting a little too bullish. But, there's always something to think
I know you
about.
joke about that. I know you joke about that, but some are literally going to think that. It's like, well, Detrick's got no risks. Tom Lee's always bullish. I need to fade that because this is just ridiculous because I got a trade war. Now I've got Musk hating on the big, beautiful alleged bill, and maybe it's not a foregone conclusion. I don't know, but I don't see any risks being talked about by many.
No, you're right. And well, listen, so we can talk. Those risks are well known, right? What are we doing with the money that we run for our Carson partners? I mean, we've got a lot of international exposure, right? We've got a lot of European exposure, probably more than just about any other RA out there. We've had a little bit of gold. We are underweight bonds, yes. But I know I like momentum. You talked about momentum for a minute there in the segment before me. We like momentum. But on the other side, we got a barbell approach. You got momentum, but we also have low vol. We did that pair trade after the election way back in November. So are we overweight equities? Yes, we've been there all year. Not as overweight as I was a year ago when I was coming on with you, though. But again, there's always some risks. But I think, that, again, to make it cliche, the biggest risk could be this bull market keeps going and investors get lost and unfortunately miss it is kind of, I think, the biggest risk here.
I know we both know there are always risks. And the risks are known because they're legit. Are they not? I mean, we still have tariffs. We may get down to a position where we have 10% tariffs across the board. Those still matter. The economy is slowing. I don't think there's any debating that. The degree to which I think is legitimately at issue.
Yeah.
But what about that? I mean, rates are still reasonably high. The bond market threw a tantrum once already. None of that matters?
No, it matters. The one that gets us, I wouldn't say keeps us up at night, but thinking about the market's pricing in still 2 rate cuts this year. I work with a very smart guy named Sonu Varghese, looks at all this data. Sonu's saying, they might not cut this year. And again, could that kind of upset the apple cart? Could that, potentially, really kind of bring back stocks and potentially bonds as well? I mean, there's, tell me there's a chance. There's a chance there. So that's something that we are actively watching. But at the same time, I mean, S&P's flat on the year. I know what we just did, a major slingshot. So after a gain of 70% the previous 2 years, back-to-back 20%ers, was it really shocking to us to have a weak first quarter? We say no. We did not see a bear market. No, we didn't see a bear market this year. But we said down 12 to 15%. Made a lot of sense at some point. Obviously, isn't it crazy? Two months ago this second was Liberation Day and all that craziness. But nonetheless, we've come back, and we still think it will be a little bit overweight equities here with a global diversified portfolio, Scott.